It feels good to win. It feels good to make money. That's the dopamine, and it gets very addictive. Here is one of the first trading plans that I originally made. Have you ever found yourself taking trade after trade, hoping to make back a loss or chase a quick win? This is called overtrading, and it is one of the biggest account killers in trading. Even the best strategies cannot help you if you cannot control your impulses. Today, I'm going to break down what overtrading is, the emotional triggers behind it, how to become aware of overtrading, and to stop emotional reactivity. Make sure that you stay right until the end because I'm going to share 3 practical techniques to help you to trade less and profit more. One of which is a super simple way to help you to reduce your losing trades straight away. These trading psychology strategies are taken from my upcoming course, Mindset Mastery for Traders, a complete program for traders to provide a successful mindset edge on the markets. Sign up to the free waiting list below. Meanwhile, remember to smash that like button, hit the subscribe, and let's dive straight in. What is overtrading? Overtrading is when you take excessive trades, often outside your trading plan, due to numerous reasons such as revenge trading, trying to win back losses instantly. All traders have been there. I'm sure you've been there, and I've certainly been there, where you have taken multiple loss after loss, and instead of doing the sensible thing of turning the computer off and walking away and taking a break, you decide to just get back into another trade and another trade and another trade, back in trying to make back what you have lost. That is revenge trading. And naturally, this leads to overtrading, which doesn't necessarily mean that you will make more profits. FOMO, the fear of missing out. Another massive emotion that most traders will face. I certainly have. I remember many times of watching as an asset will continue going up, and instead of waiting for a sensible trading opportunity such as a pullback or an entry as per my trading plan, I will just jump in and buy at the highs, afraid to miss out on the move. Jumping into trades without proper confirmation, that is the definition of fear of missing out, and this will also lead to overtrading. Overconfidence. On the flip side, as traders, we will have our winning streaks. It does happen. And quite often, I'm sure that you've been there, and I certainly have, you will have a nice streak of winning trades, which will make you feel almost invincible. Thinking that you are on a streak can lead you to taking unnecessary risk. And this can lead to overtrading, taking those trades that are not necessarily A quality, but hey, you're on a streak, let's just take them and make more profits. Not always the case. And finally, boredom trading can certainly lead to overtrading. You're sat there, you're watching the charts, you're flicking about from asset to asset, and all you are seeing is a ranging market, a choppy market, there's no momentum, there's no movement. It gets a little bit boring, and sometimes you might just think that you can see a setup. You will force a trading opportunity and get into a trade because, hey, that's your job, right? Is to get into a trade, so let's just do it. Trying to force a trade can lead to overtrading. You've got to remember your trading plan, your setup, and wait for those A quality trades. Overtrading not only drains your capital, but it leads to emotional exhaustion, which ruins your ability to make rational trading decisions. Why do we overtrade in the first place? What causes that? It's important to remember that overtrading isn't a strategy issue, it's a psychological issue. It's triggered by various emotional responses, such as dopamine addiction. Every trade triggers a chemical response in your brain, like a gambler chasing a win. It feels good to win. It feels good to make money. That's the dopamine, and it gets very addictive. Loss aversion. Our brain hates losing more than it enjoys winning, making us take irrational trades to fix a loss. You understand how comfortable it feels when you lose, but we've got to remember that losing is a part of trading. You cannot take the winners without the losses. But All we can do is regulate those losers by following our trading plan and using correct risk management. Lack of patience. Traders hate sitting on their hands, so they will force trades instead of taking those high probability setups. This relates to the boredom trading. It comes down to a lack of patience. And what do you do if you are lacking patience? Well, it's best to focus on tasks and activities that will help you to build patience. We will talk more about these techniques later in the video. Let's talk about 6 ways to help you to become aware and to stop emotional reactivity. Firstly is to have a trading plan, and more importantly, to stick to it. Define your entry and your exit rules, risk management and max trades per day. If a trade isn't in your plan, don't take it. Let me show you something really useful really quickly. Here is one of the first trading plans that I originally made. I included these really useful affirmations at the beginning just to help you to stay motivated and disciplined. Forex trading plan. There is an example here where it has been filled in with an example strategy, and then there is a template containing blank spaces where you can enter in your own strategy. This just helps you to focus your strategy, including all of the important aspects such as your pre-market routine, your time frame, any indicators, the assets that you will trade, market conditions, risk management, etc. If you would like a copy of this trading plan, there is a link below in the description where you can download it for free. The second way to help you to avoid emotional reactivity is, of course, by keeping a trading journal. Track every trade and write down why you took it. If you see a pattern of impulsive trades, you will instantly recognize your bad habits. There are many journals available to log your trades. There are digital ones, such as the one I have available on my website. You could buy a printed one. This is just one that I got off Amazon. I also received a free trading journal when I originally joined with the prop firm, the 5%ers. I've been trading with the prop firm, the 5%ers for some time now. As a prop firm, they are a great option if you want to trade a larger capital, where you can trade one of their account sizes and you both take a share of any profits that are made. But they don't stop there. As well as offering account sizes for trading, they also offer these extra features, including live trading room, free webinars and workshops, and one-on-one performance coaching. They have 3 different programs that they offer to traders: the Hypergrowth, High Stakes and Bootcamp program. I'm currently funded with the Hypergrowth program, so I am trading that live account with the 5%ers and taking a split of profits that are made. And I'm currently enrolled in the High Stakes program challenge as well. And my favorite feature of the programs that the 5%ers offer that differ from any other prop firm out there is the fact that they have removed the time limit, which means that you have an unlimited amount of time to pass the program. This is a massive game changer, and it can really help you to avoid falling into a stressful situation when you're trading. Let's face it, trading can be stressful enough. If you want some more information, or if you're ready to have a go for yourself, do check out the link below in the description. Number 3 is to set a daily time limit. Give yourself a maximum of, say, 2 to 3 high quality trades per day. But it's important to remember that once you hit that, you have to step away from the charts. This is a really simple tip, especially for beginners, to help you to avoid overtrading, which can drastically reduce the losses that you take. Another tip is to use time-based cool downs. If you take a loss, force yourself to wait 15 to 30 minutes before you take another trade. This can be a super way to help you to just cool down your emotions, step away from the screen, recenter yourself, helping to prevent revenge trading and making emotional decisions. Treat trading like a business, not a casino. Ask yourself before every trade, would a professional fund manager take this trade? If not, skip it. Finally, practice mindfulness and emotional control. Before trading, take deep breaths, visualize success, and set clear intentions. If you feel emotional or you feel those familiar feelings creeping in, the heart rate starts speeding up, your palms get sweaty, you start to feel anxious, just step away for a moment and allow yourself some time to calm down before you return to the charts. Let's look at 3 practical techniques to help you to stop over trading. Firstly, and this is one of my favorite, is the pre-trade checklist. Create a 5-point checklist that you must tick off before you enter a trade. For example, Is this trade in my plan? Am I entering this trade at a key level, such as a key daily level, support and resistance, Fibonacci? Is my risk-reward ratio at least 1.5R to 1, if not more? Remember, it is super important to aim to make more than you are risking on a trade. Have I checked my emotional state? If I am feeling emotional, I will take a few minutes to take some deep breaths, go over some calming techniques to help me to reduce my emotional reactivity. Finally, am I okay with this trade losing? Can I afford to take it? Is my risk correct? If you're okay with losing the trade, then you know that the trade you are taking is worth that risk because it is an A quality trade. I'm going to set you guys an exercise. Write down your own 5-point pre-trade checklist and use it before you take every trade. Let me know if this helps you out in the comments below. Practical technique number 2 is the 3-strike rule. And the rule is simple. Once you take 3 trades, whether it is a win or a loss, stop trading for the rest of the day. This helps you to prevent revenge trading or trading out of frustration. If you are a beginner trader or you are especially struggling with overtrading, this rule is crucial, and I have used this for a long time with my trading. Whenever I feel like I go through a losing streak or my emotions creep in, I may reinstate this rule for a few days to get myself under control. Test out this rule for a week and then look at your results. See if it's helped you to reduce your losing trades. Finally, the post-trade self-check. After every trade taken, remember to review the experience. Ask yourself, did I follow my plan? What was my emotional state before taking this trade? Would I take this trade again for a similar setup? Review your last 5 trades taken and reflect on the decision making. This allows you to analyze any mistakes that you are making when you're setting your trades. If you're noticing a pattern, for example, you don't wait for this key level on all your trades, then you know that you need to make amendments to your trading decisions, which will help you to improve your profitability. Overtrading is the #1 account killer for traders. But if you build awareness and discipline, you can avoid it and trade like a pro. Which of these tips resonate with you the most? Let me know in the comments below. If you want to find out more, remember to sign up to the free waiting list for Mindset Mastery for Traders, a program to help you develop a mindset edge over the market. Please like and subscribe if you found this video useful, and I will catch you in my next video. Thank you for watching. Bye.